Well, good morning, everybody. On this Tuesday, November 26, 2019, glad to have everybody here. I imagine some folks have already taken off for the week. For them, I wish them safe travels. For anyone here getting ready to take off, I wish you safe travels. In fact, that's an order. Travel safe. All right. So, nothing is better to have some longs on the table, and you wake up in the morning and the market's up. I mean, that is so nice. I mean, just imagine if you're full of longs, your positions are longs, and you wake up and the market is down 200 or 300 points or down below some special line. Oh man, what a bummer for a day. Good morning, Aaron. How are you? I'm doing good, thank you. Thanks. So here we are today. It looks like we're up a little bit. So we want to watch that. We're up. We're holding on to yesterday's close is what we're doing. So that's kind of the important thing here. On my chart, this is the trap chart. I mean, the T line and the green line is the 3 EMA, and then I've got the volatility stops. Those just work good together, I think. Pretty clean chart, 3 lines or 3 indicators up there. And a little bit about the T line. One of the great things about the T line is when stocks are trending up, the lows or the price in general, everything about the price tends to stay above the T line. It's very interesting. It really is nice. I know some people that use the 7 EMA or the 9, and they try to tweak it and make it theirs. Hey, that works. The bigger number you get, the bigger number you use away from the 8. Well, what happens is sometimes you don't come down and touch it. Hey, world's not coming to an end. It's a nice, different little thing if you want to do it. If you make it too tight, if you make it like the 5 EMA or something like that, then what happens is you'll see a lot of lows and the bodies sink through it just a little bit. Just amazing how the 8 works. It's just crazy. So the same thing is true if we start going down. Once price starts going down, the tops of the price action or the body, if it's a shaved body at top, will come up and tag that T line, and then what happens is it just simply starts trending down. So the takeaway here, as long as this is what we're doing, life is good. It really, really is. The problem is if we start getting below the T line, which that can simply be a minor garden variety. Hey, look, the market needs a little rest. It could be that. But once it starts that, open the other eye, and let's start watching for those other little signs that might take us down low. So bottom line, when you see a chart like that, life is good if you're long. Sucks to be short, but life is good when you're long. And right now, there's nothing about this chart that suggests to me that the sellers are coming in. If we look at the T21-22 chart, we're getting maybe in that overbought area, but I think everyone realizes that whether you're overbought or oversold, there's no guarantee there. Maybe it just starts, a few red flags start coming up. The trend, bullish price action, that's where it's at. That's where you make your money. So as we start getting a little overbought here in the T21-22, the 4-week new high-low ratio, we start getting a little overbought. Okay, so maybe a little red flag comes up. We start being a little careful. But overall, the market is doing wonderful. Okay, let's take a look at some charts here. Once again, I'm probably going to end up going into the open. All right, so DXC was on the watch list yesterday. Some folks got into it. I think it's still a dynamite trade. I still think it's an excellent trade. We've rallied up. This is one of my favorite type chart patterns. They come in little different varieties, maybe a little deeper pullback, things like that. But when you see a nice run, I'm going to make that smaller. Let's see here. Let's do that and try that again. Make it smaller. There we go. When you see that run up, it's still not the tool I wanted. There we go. When you see that run up, you have to ask yourself, why did it pop up? Well, I got to tell you, I'm going to pick on Bob C there because I think he would understand. So, newsflash, folks, it wasn't Bob C that did that. Okay? That wasn't Bob C. Now, if you want to do this, you can. Go to a stock that has almost zero volume or very low volume, and by golly, you can move the stock. Now, that's really cool until you go to sell it. Then it's not so cool. But right here, Bob C didn't do that. It took some power to move that stock. That means there's tons of not only traders, but investment firms, things like that, that's interested. So what we look for is the rest. Because you know what? You, me, no one knows. The retail trader, and we're all retail traders, you don't know that that's going to happen. I love to hear people claim they do. Well, why weren't you in it? Okay. You don't know when that happens. But what we do is we wait for the consolidation, just like this. Because when there's a move here, there's consolidation, and what we're betting on is that next move up like that. So that's what we look for, is these nice little tight consolidation areas, J-hooks, continuation patterns, pop out of boxes, things like that. The trap works great because we pop up over the T-line, we come back, we test, and now we get into that 3 EMA, breaking out of that 3 EMA. Hey, this stock's ready to rock and roll. The biggest thing you have to do at this point is negotiate an entry. So where are you going to negotiate that entry? Every trader is a little different. I better move on to the next one here. AMG. There's AMG. Look at that big run up there. See how we've pulled back? This is a little sloppier chart than that other one there. We can take this and draw trend lines. We can draw another trend line. Let's go across there, right in there. You see how we're breaking out? So look at that run up. Here we've come back, we've tested, and now the bulls yesterday, the price action is suggesting that the bulls are stepping back in. Ideally, I like shopping for an inside day. I think that's one of the cleanest, clearest places to buy, because if you're shopping that inside day and you buy, whoops, let's try this again. Let's do it this way. If you buy something on the inside, now you've got a couple places you can put your stop. One, it could be the low if you really want tight stops. It can be the low of the candle you're using as your backstop there. Or you could come down and find out where maybe a pivot low is, something like that, and right in here. And now you can control your risk. Where should your risk be? Of course, you've got to make sure that there's some reward. And as buyers, if you're buying it in here, I think your reward is very good. If it breaks out, your reward is still very good. Please note, this is not the trade. That right there is not the trade. That right there, it's not. I think traders that trade like this, in other words, buy, sell, buy, sell, buy, sell, I think what happens is they poop. Is that poop? They poop like an elephant and they eat like a bird. You can't do that. You can't trade like that. You can't eat. This is eating. This is eating. But when a trade goes against you, that's pooping. Funny how the poop is always more than the eating. It's funny how that works out, but it does every time. Every single time. So if you win 1, 2, 3, 4, 5%, but you poop 7, 8, 9, 10%, do the math. How long are you going to last? So that is not the trade. The trade is bulls are showing positive trading. We want it to go up higher. Intap was on yesterday's trade watch list as well. I think it's still an excellent looking chart. I think I would like it on a breakout or even, there we are, even say above $61. So this to me could be the buy area inside. The breakout could be the buy. See how we're trying to make a continuation pattern J-hook? The J-hook pattern itself is not typically where you make your money. Now, if it pulled back further and you bought it and it moved back up, well, that could be a pretty penny. I mean, that could be. If it pulled back here and then up here, well, that would make sense as the trade. But we're talking these small little dips. These are just continuation patterns. Look at this one right here. Look at this little run. Look at that. Beautiful. Anything to the T-line is just a small little dip. That's all it is. That's opportunity. We just need to wait for the clues. The clues like what's happening right now, where you have a little inside candle, Hiromi, Doji type, small-bodied candle, showing that the bulls are trying to stop that bottom. And then we had the follow through here that really locked some of that bottom in. It's showing that being a pretty nice trade. Oh, I just looked over here. Looks like we're opening up slightly, well, just about into the red dots here. It looks here. So, Intap, good looking chart. CXO, nice looking trade. Nice bottom on CXO. Love that little bottom right here. We've rallied up. We're moving sideways. You can see the trap type setup. Nice consolidation. Let's run over here and check the RBB chart because I do believe that is an RBB. Let's set that up. There we go. So the RBB setup, something I just noticed in this chart, and I did not see this earlier. Beautiful, organized, bullish W pattern. I didn't see that earlier. All right. So now we have a pretty nice little box setting up here that we have broken out, showing that the bulls are ready to move. So now it becomes negotiate your entry. Targets are up in these areas here. I mean, that's just the rounded bottom breakout. And even if we pull back a little bit, that could be the reason to buy. We start popping back up. That could be the reason to buy. The whole area to buy is right here. Ask yourself a couple simple questions. What can this chart do for me? And what's my risk? Mark that on your chart. Mark it on your chart. This is my risk. That's my reward, give or take a few pennies. Do the math. Is it worth it? Now ask yourself is, if you buy it here, are you willing to risk 6%? Maybe you are, maybe you aren't. And if you are, you're good to go. If you're not, there's nothing wrong with raising that stop up a little bit to what you can afford, what you feel good with. Now, I wouldn't set it so tight that you're guaranteed going to get knocked out of it, but you can adjust your stop in here. Another thing you might want to do is look at a 2-day chart. That helps out a lot. 3-day chart. I love looking at longer term charts. You might look at those. Those give you a little bit of help, a little clarity in the chart to maybe help you find where that stop should be. And I like that right there. Now, one thing we want to watch when we're looking at these charts, well, there it is there. It's pretty nice. Am I for sure on the daily there? Yeah? Wow. Okay. Chart looks different. Let me open that up. There we go. Now it looks about the same. I look at this. I love it. I love looking at it on this chart right here. That looks nice. The channel chart, that looks nice. We're right inside that channel. That looks excellent. Love it when it does that. See, HAL. Okay, I tried to buy some HAL before the close yesterday, but I didn't make it. Never filled. Market closed and boom. So I may be trying early this morning to buy HAL. I like that chart. Here's the RBB setup. And there's a couple of these oil charts that are set up in these RBB setups. And maybe I don't buy this one. Maybe I'll buy another one. But I think I'm going to buy something. I love the RBB setup. We've already tested the dotted deuce back down to the 50. We're back up here testing that dotted deuce again, which we're set up with a nice little doji continuation pattern. I'm kind of liking that. Pre-market, we're right here at the top at about 21.35. That's looking very good for that next target to the upside. So I have to ask myself, what's my risk? I'll just put it right there for now. And my reward up here. And I'm going to put another one in here. So now you can, if we buy at 21.40, your risk is 3%. Reward 5.45. Not quite 2 to 1, This one up here is definitely 2 to 1, 10%. If you're buying an option, which I will, that's money in the bank. So I'll have to watch my entry here. I think the reward is top notch. CBS, I believe somebody posted in the room yesterday, bought some CBS. Thank you, by the way, for posting that. I marked that chart down. I thought it was a pretty nice chart. I kind of knew it was going to be on the watch list today, just because it was a great looking chart. You can see the little flag right in here, or the consolidation, or even the box. Just consolidation, rally, consolidation. And then we broke out yesterday. So now what we want to look for is the most opportune time to buy. And that can be right there. And I'm going to drop down about halfway to that box. That becomes kind of the new area right in here. So watch for a little consolidation to get a little better buy. Those that just want to buy it, you can buy it. ARNC, we've talked about that several times in the room. Several people here have talked about it. I admit it's a little bit far away from the 34 EMA and the 50-day simple moving average, but it seems like it just continues to do what we like to see charts do. And as long as it does that, it's still a working chart. It's when it breaks down through that trend, we might want to step away for the long side. So right now, ARNC may be a buy. My stop, anything below about $30.40, I don't think I'd be real interested in it on the long side. It would have to start coming back up or find support and start a new trek back up. Let's see, DVA. This is another one that's a pretty far from the 34 and the 50, but it's still rocking. Long as it's still rocking, long as it's still making lows, highs, higher lows, higher highs, higher lows, higher highs, you can play those minor little dips back. Yesterday I talked to here in the room about a couple of scans I have, 2-day low reversing. This would have been a great example of that right in here, or right in here. 2-day low reversing for those that have the LTA scanner. CDW. Let's get rid of that. CDW, nice consolidation here. And you can see it broke out. We rallied up, gave us a little candle that said, whoop, maybe the sellers are stepping in. And maybe they are. Maybe they're going to get ready to crash this party right to the downside. But right now, we've got the bulls holding us up 1, 2, 3. 3 nice lows right in the same area. Nice little candle yesterday. Bulls may not be ready to give this up just yet. Below 135.70 would make us concerned. ANTM, I believe somebody bought this yesterday as well. ANTM lows, anything below those lows, would not like it. If you want to put it up there below yesterday's low, that makes a lot of sense to me. Anything above that, I'm looking at some bullishness. I don't much care about that wick up there. Don't really care about that at all. I'm going to follow this trade pattern, and you can see this trade pattern. This whole trend has been this way. I mean, this thing just goes up, back, up, back, up, back, up, back, up, back. Hey, as long as this keeps doing that, let's make some money. Trips to the bank. The last one I have is CTL. Nice consolidation on CTL, just kind of waiting for that warm and fuzzy feeling. Here's a 2-day, 3-day chart. 2-day. Look at the 2-day chart. Look at that nice tight consolidation. So I'm just waiting for that warm, fuzzy feeling. Haven't gotten it yet. Traders, put a little time in. You'll know what I mean. You'll get that feeling. What's really cool with the scanner is you'll be able to see it start popping up before it actually gets too far out of hand. And that helps with that little warm, fuzzy feeling. Okay, markets opened. Want to remind everybody to manage the charts you are in. That is very, very important. For instance, here's one I'm in, FITB, that is up pretty nice, and I want to make sure that it doesn't start weakening up here. All right, everyone take care. I'll be right back in just a minute.